Good morning, folks. Anthony Special here with Special Analysis. Today is Friday, March 11th, 2022. I hope you had a fantastic week. Wanted to kind of wrap up this week with taking a look at a chart of Netflix and how I would be positioned to take the short side of this recent trade that has transpired. So I'm going to open up the chart. We're going to jump right in. Before we do that, of course, if you like these videos, if you're finding value in them, if you're learning something, if you enjoy them, below, please like them. Please share them on social media. Please subscribe to my YouTube channel. This way you get instant access every time I put these out. Everything I do on the internet, social media wise, is completely free. All this content is completely free. There's nothing to buy. If you're looking for paid services, of course, I offer them with Traders Agency. But outside of that, everything else is just complete value that I am delivering to you, all my subscribers, all my readers on a daily basis. So let's take a look at the chart. We'll see what's going on here. So I'm going to do this first. I'm going to take away the analysis and the breakdown. And we can clearly see this is a weekly chart of Netflix. And you can see, obviously, we've been selling off pretty aggressively since November-ish of 2021. Market kind of peaked out here, hit a high November 15th, that week of November 15th, and then the market has essentially rolled over. Now, listen, this is all exciting and this is great, but if you don't know how to analyze it and you don't know how to execute it, it means nothing to you. I mean, there's no safety factor in place. There's no way to know when and where to get in. There's no way to know when and where to get out. But with some simple analysis, by drawing three simple channel structures, actually two channel structures with three lines, it really opens it up to what is happening, when it's happening, and how it's happening. So all I did here was create a channel with the channel extension, and this is something I teach at Traders Agency, of how to build these structures. And then I know how to execute a trade because I have a roadmap, and that's really what is required to successfully trade. You need to understand where price came from to understand where price is going. And it's a discipline, it's a skill, it takes time. I don't want to misinterpret the fact that this is easy. It's certainly not. But as you develop as a trader, as you learn, as you go along your journey, this is what you're able to accomplish for yourself. Now, there's no fancy paid indicators on this chart. This is just simply drawing lines and channels. So I want to break it down real quick to tell you what I see and how the short side for Netflix transpired for me. So my primary channel was built off of this price action here. This secondary channel, which is called a full channel extension, was built off of this price action here. And you can see price even protruded through it. Now, most people would think, hey, this thing's going to keep going to the moon. But for me, that's not necessarily a buy signal. And if it is, you're going to be ultra conservative with it. What the buy signal for me is when it broke back into the channel structure. So the close of this candle here gave me what I need, and what I need is called a 1% confirmation. I need price to close 1% beyond an area, either support and resistance, in order for me to consider a trade. Then I need to do a few things. I need to assess the risks, and then I need to assess what my potential profits are. So my risk, I would place a stop above this previous candle here, the one that opened and closed above the channel structure before the confirmation came along. And this is where I would place my stop at 635. So if this trade went wrong, if this breakout was false, if it didn't transpire as I anticipated it to, that's where I knew I was wrong. I knew if price retraced beyond that 635 area, I was wrong. But I also knew that I had an opportunity to sell against this area. So what happens is support becomes resistance, resistance becomes support, and that's just the way it changes. So I had plenty of opportunity. My sell signal was here at 585. I had opportunity above that to fill at what we call price improvement, with price improvement. So I could have shorted the market anywhere in this 2-week period before it completely did what I anticipated for it to do. It basically tanked. And what was I going to do from there? Well, I was simply just looking for where I'm going to exit the trade. So I would sell half my position above this ascending line here of support. So I placed a sell order at 460. And then the other half of my position, I would sell above this ascending line of support, which I have another line indicated at about 320. So what would I do when I sold this first half? Well, I would get my stop to break even. What would I do at this point right now? So price impulsed, it corrected, it's impulsing again in the direction I anticipate. I would now have my stop taken from here all the way to right here. So worst case scenario, if this trade turns around right now today, the worst thing that's going to happen is that I sold my entire position at target 1 because it's just above my last swing high. Now, hopefully that doesn't happen. Hopefully this continues to sell off. It tests the 320 area, and that's where the other 50% of my position is sold. Now, listen, I understand shorting the market is very risky. Not many people are willing to do that, and that is okay. So what would I do? I would control my risk by buying puts. When I buy puts, it gives me a limited risk. Whatever I paid for the premium of the puts is all the money that I could possibly lose in the trade. And I can sell half of my puts at my first target, and I could sell the remaining half of my puts when the underlying asset reaches the second target. And I could do the same by just simply monitoring the price, that if price would come and hit my stop or hit me at break even, I would exit, or hit me at this first target, I would exit. So it's just a management skill. It's just a trade plan, nothing more, nothing less. And that's what we teach. It's what we teach at Traders Agency. It's what I teach. It's what I preach. It's what I give you in all these free videos and all this free content that I put out for you, because I want you to understand it and know that there are ways to approach the market to the upside, to the downside, with controlling risk. And you can be very, very successful and create the life that you desire to. So that's what I had planned today to share with you. I hope you enjoyed this video. I hope you found it informational. If in fact you did, below, again, please like, share, subscribe to my YouTube channel. Visit me, AnthonySpeciale.com, and of course, you can always visit me at TradersAgency.com as well. Love to have you, become a member of one of my paid services, or at the very least, continue to take advantage of all the free content that I put out. I do this on a daily basis because I believe that it adds value. I got into teaching because I wanted to provide people who were trying to become traders or try improving, to improve it on becoming traders, the opportunity that I didn't have when I was looking for the same. So, guys, with that, I wish you a beautiful and blessed weekend. Enjoy it. Have a great time. Enjoy yourselves. Enjoy your family. Enjoy your life. It's short, and we certainly want to make the most of it. And I'll talk to you next week. Take care.